Well, certainly when we came in this morning, we weren't given too much of a lead from Wall Street. The S&P was down 0.1%. There wasn't really too much in the way of weekend news to key off this morning either. Obviously, most of the news was still the markets really adjusting to the fiscal stimulus that's been going through markets, the idea of hope that we can see better growth and better inflation expectations as a result of Trumponomics, which is akin to Reaganomics, I suppose. But certainly the market has really got off to a good start in certain areas. I mean, if we look at the actual news flow today, I mean, a lot of it has really focused on the Chinese high-frequency data dump. We saw industrial production numbers slightly below expectations at 6.1%. The retail sales numbers up 10% in China. That was significantly below expectations. The market was looking for 10.7%. But the fixed asset investment numbers at 8.3% were just a little bit above the market's expectations. The wash-up is that we haven't really seen too much of a fluctuation in markets. The CSI 300, which is the top 300 Chinese mainland companies, is up about 0.5%. We have seen it coming off the highs of the day, but certainly that market is looking very good at the moment. Certainly the authorities there all like the low volatility we've been seeing there and the gradual trend we've been seeing going higher. Have a look at US dollar against the CNH. That's moved up to a new high. The CNY, which is the onshore currency there, the one that everyone in China focusing on, is about to break through the peg that we saw between 2008 and 2010. That would be a really big interest situation for semantics in China, and I think it's resonated across the rest of the Asian region. If you look at the selling, we've seen the Malaysian ringgit, you've seen big selling in the Indonesian rupiah and the Korean won as well. If we see further dollar strength mixed with a continued Chinese devaluation, that's got to be bad for emerging market Asian currencies as well. The big outperformer today, though, has to really come from dollar yen and what that's translated into the Nikkei. The Nikkei is up 1.6% because we've seen dollar yen pushing up to 107.59. I still like this trade. I think it's got more juice in it to the upside, but I am cognizant that we could see a little bit of a pullback in the moment. But certainly the bulls have got this one firmly in control at the moment. The Nikkei being up 1.6% has resonated with US futures. The Dow futures are up 91 points, S&P futures up about 0.4, 0.5%, and that's really putting some good upside into our European opening calls. The ASX 200 is down on the day, down 0.8%. Most of the selling coming because points have been taken out from a couple of big stocks going ex-dividend. But the story of the day remains the dollar strength. The markets continue to adjust for what they're seeing from the changing investment landscape and these steepening yield curves and the sell-off in fixed income, what that means for investment flows going forward. And ultimately what we're seeing in emerging market assets at the moment, which are getting hit very hard.